Oh, that was working better. Okay, so it's normal now. Okay, I guess I was trying to improve something before and I messed up something. But all right, I have you now. Okay, let's go back to business. So where was I? I was saying something about deltas here, but we'll deal with that later on. Let's go ahead and put a trade on. So we said we're gonna go for around the usual 400. I mean 450 to 500, 550, something like that. Our goal weekly target premium is around 1100. So anywhere actually around 550 would be nice to do a couple of trades per week. So let's see what the market is giving us right now for that. We go to MES with our account size. Now, if you have a large account size, you could do the same strategy with the portfolio margin and using ES and SPY instead of MES, but this will do for us for now. And you're just, oh, yeah, that's right. So, okay, all right, now, there you go. So let's take a look at this thing right here. We're gonna go to MES, go to table, and let's go to, so we can do 87 or 115. 115 is a little bit longer than we would like to, but still within reason. Anything up to 120 is pretty much fine. So let's just take a look at here. 87 is also fine, a little bit shorter, but let's just take a look at the 12 or 13 delta. I mean, we have 11 or 13 here. So if we go for our standard 3, we'll get 543 at 11 delta. So that's fine here. So let's just double check and see what's going on in the 87 base. Now we have a bunch of trades here already, so we might as well start moving to the other one. So let's go back to this one, and 11 is fine. We can go to 13, but 11 is fine. We'll go for 5,000. We'll try and collect the full amount. Let's see if we can do that. Let's just make sure that it's 3 of them. 3 times. All right, let's send this. And as usual, we'll have to play a little bit with this and replace the order. Go down a notch. Do that. Now that's going to fill 36.25, and then it's very simple process. We go here 36.25 times 3 and then times 5 for the multiplier. So 543.44 is what we collected overall on our naked premium, and then we just go times 0.2 to show us how much money we want to spend on PDS and commissions all inclusive. So given that we have around 5 trades, that's give or take $12, $13, $14, something like that. So somewhere around 95 is what we want to spend on the actual put debit spread. And to do that, we're going to go to a shorter duration, and we could go somewhere here. Let's go to 69, see if it's too crowded or not. And we have something at 25. We can we don't want to do the same strike that we're already using, so we can go here and just see what $95 would give us. This is 82, so this would be perfect roughly. If we go here, we get $150 wide, but let's just see if we go a little bit up and then go a little bit shorter. We can do that. We could also consider going to a nearer expiration if it's less crowded, and then just go something like this. Where is it? The nearer expiration will give us a little bit faster reaction to any pullbacks in the market, and we'll be able to get closer to the money for the same amount, and or get the wider PDS, so a little bit more protection. And obviously, as a trade-off, we get to keep this PDS for less time than we would with a longer expiration, of course. So I think anything around 60 and up is fine. I think I'm leaning towards staying around 60, something closer to 60, just not going much under 60, but 59 is certainly fine. So we could consider, let's see how wide is this. This is 60 plus 70, so 130. So that's not bad. And for 90, so we probably have to pay up a little bit and just call it a day. So I think we'll just go ahead and do that. And let's first try and see if we can get it for the price that's being asked and that's unknown. So we're going to replace it. We're going to go up, pay a little bit more, and then we'll chase it just a little bit more, maybe another quarter. But if it doesn't work, then we're not gonna chase it. We're gonna move it around and get something else. So let's take a look if we can do that. We go one more. So that's 1850 now instead of there you go, instead of 18. So a little bit more we're paying, but still within what we try. Okay, so this is not going at the moment. So let's see. Let's give it a second, and then we'll come back to this. Let's go ahead and talk about the other thing that I was mentioning earlier. So why do I have these different deltas here for the different put debit spreads, for the longs of the put debit spreads? So the thinking is like this: the closer to the money you go, or the higher the delta, you're gonna get closer to the money. Obviously, the higher delta is closer to the money, but it costs more money, and therefore you will get a narrower PDS. But we have to think about when that happens, and the opposite is also true. Obviously, if you go down to 20, the PDS, all else equal, the PDS will be wider, so it will react slower because it's farther away from the money. If you compare it, comparing apples for apples, it'll react slower, but it will provide wider protection. It's a wider PDS. So what do we need when? And this is based on VIX. So think about the VIX. If the VIX is high, don't even put any number on it. The higher VIX indicates that the more risk is already priced in. Our naked put that we put on at that time will be further away from the money, and there is less chance, theoretically, there is less chance for a huge spike in VIX, because VIX is already elevated. The opposite is true if the VIX is low. If we are in a low VIX environment, if the VIX is 11, it's much easier to jump to 14, 15, or 16, like 50% jump, than it is to go from 20 to 30 or to 28 or something like that. It can happen, of course, but we're just looking into probabilities of something happening. So given that we know that, if we are in a higher VIX environment, so let's say 23 and above, which would be pretty high, we want to get to a higher delta, because we want to still stay somewhat close to the money, because remember, VIX is already high, all the strikes are pushed out. So if we go to a 20 delta with a 23, 25 VIX, we're going to be so far away from the money, and the reaction will be slower, and it's not the same as when the VIX is low. And when VIX is low, we can afford to go lower delta. We'll still stay closer to the money, and then if there is any spikes, we'll have a larger PDS that's closer to the money than it would be under higher VIX. I know this is a little bit of all over the place. So one day we'll maybe go and use the little pad and show some graphics around that, but that's the basic idea. So nothing has to be precise. There's a little scale somewhere from around 20 to around 35 as a general rule of thumb, and then we scale it up and down depending on the VIX and the amount of money that we have to spend. And right now, let's go back to our little lonely put debit spread here that is getting no love from the market. You see, we're offering more than it's being asked, so we're gonna cancel it, and we're gonna go back to trade, and we're gonna go to, let's go now to 69, and let's go to what we had here. We were looking at 23, something like this, or let's see this. Let's pay up a little bit up and see if we can get this closed. Now its price is chasing our offer, so I think we'll have to go ahead and give them another quarter. Replace, go up. All right, so 1925 is what we have, and we are now filled. So what we're gonna do next is we're gonna go and put this info to our spreadsheet. And by the way, speaking of spreadsheet, it's available to our premium Discord members. Now we have a free Discord membership. You get everything. We have a bunch of other guys there sharing some ideas and some tools as well, and you can join for free. Just put your email here and you're in. But then if you want to get the actual spreadsheet that I use and my complete trading plan, there's a small one-time fee that will give you lifetime updates, and you can do that as well. Links are in the description below. But let's go back to, oops, where am I? I need to go here, and I need to go here. So this is trade number 85, and it's MES. Today's date. VIX at the time of the trade was 1455 roughly. We did 11 delta, and we did 5,000 strike in 115 days, I think. So this was November 15th. Let's just double check that the expiration is correct, because sometimes that messed up. Yeah, it's November 15th. And then let's go quickly to this. We got 36.25. 36.25. We got a little bit more money, even though VIX is lower, because we went further away in time. Okay, we did 3 of these, so that's it. And then we did this. Let's just double check here. It's 54.25, 52.75, 54.25, and 52.75. We did it in 69, and we paid 19.25. Oops, minus 19.25. So this is now completed. Let's see, let's go back. And now you can see right here that our next trade is scheduled for the 25th, which is Thursday. And yeah, that's it. So let's go now here and complete this 1455. And let's take a look at our deltas and all that. So let's close this. 154 and 93, 154 and 93, then the Vega minus 824, 824, and then buying power. So buying power right here. Let's refresh this. No, 25.7. 25.7, and then actually let's take a little peek here at the Netlick. 71.778, 71.778, 71.778. All right, so a couple hundred up from yesterday, and decent, a little bit over 1,000. Well, actually more than that from last Friday, so which is good. And then at the moment we're looking at the 1378 for our leverage, and 3.9 for our thing right here. So if we take a look here, it still says yes as far as underexposed, yes or no. And what that means is that under the circumstances, we can allow, if we want to, this is optional, but I'm kind of doing it as a default. We can allow our naked puts to decay past the 60% profit target, which is our initial goal that we have. But we'll still take a look and see what we have there. Let's just see this 71. So let me just see 21, 13, 1.25, yeah, we're in pretty good shape. So there is no need to rush with closing the trade, even though obviously the market can go down tomorrow. So that's all, besides the point. But let's take a look at our positions, the actual positions. And we have, let me see, this is all put debit spreads. Some of these can come in handy if the market continues to pull down. And then we have here, as you can see, let me try something here. All right, see this? This is pretty cool. So I can do a little bit of, doing these things, zooming in and out if needed. So that's cool. And this one is at 68. So this one is prime. If we want to close it, we can close it. It accomplished what we set out to accomplish, which is 60%. Everything else is a little bit of a cherry on the top. But if our metrics are a little bit tighter, a little bit more stretched, then we would just go ahead and close this one. The same for this one, because it's just over 60. So those are two candidates right there. And then in this expiration here, we'll have 61%, pretty good. And then we have 32, 31, 24, 31. And these are just, this one, what is it? This one is slightly negative, and then this one is slightly negative. And let's go ahead and remove this, and then just go ahead and mark these. This is, if you guys have any questions, if I need to clarify something, please put it in the chat. And this is now naked puts 85, and then this is going to be our BDS 85. All right, so you see, even with the recording all of this and chatting away and all that, I mean, we are basically done with our trading. We're basically done with our trading in less than 10 minutes, and I do it a couple times a week. I could even squeeze all of this into one trade per week, just sell a little bit more, or even potentially move to ES. So we could do that if you don't have time, or you don't really want to spend too much time doing this. But the problem is not the problem, but the thing is that a lot of people are telling me, even in Discord and otherwise, that it's just it's hard not to do, hard not to get engaged, and hard not to do. And I think that it's important that we remember that the goal here is to make money over time. The goal is not to be spike our adrenaline and be trading all the time. You can do it, it's fine. Some people are successful doing it, but that shouldn't be a goal in itself. The goal is to make money, and we have to learn to sit on our hands if we want to be passive traders like I am. And maybe even you can open a small account for a little bit more active trading, and keep main account, something like this, where you just can try to consistently get some steady income, as our name implies, steady income trading. So that's all I have for today. I think we covered everything, and we put a trade on, we recorded everything. There is nothing for us to do until Thursday, when I will see you again in another live streaming session.